Markets tumble this morning as Russia removed from the SWIFT banking system. What does that mean for you and your money? We're going to go through markets, gold, and oil this morning on 3 minutes on Markets and Money. Over the weekend, of course, more sanctions on Russia, removal of Russia from the SWIFT system. That potentially puts banking transactions at risk. That's weighing on markets this morning. Futures are pointing fairly lower. Dow's down about 400 points right now as we talk about this. Again, they've been all over the board this morning. Dow was down about 600 points last night after the initial announcement. Things have recovered here a bit this morning. Again, lots of volatility here and positioning as traders try to figure out what this means for the financial markets, what the risks are. Again, initial kind of knee-jerk reaction, a bit of a sell-off. That's not really surprising though, because on Thursday and Friday last week, we had a very sharp reflexive rally in the markets coming right up to this downtrend line that we've been building in the markets as well. This morning, stocks are bouncing off that downtrend line. Not surprising here, we're getting a little bit of a sell-off after that big rally last week. The news over the weekend, not great. Talks are scheduled to start today between Ukraine and Russia. That could help alleviate some of this. If the market can come up here and get a rally above this downtrend line, that does help improve the situation for the markets markedly in the near term for a continued rally as we get into the month of March. Switching over to the commodity safe haven side of the ledger, gold is doing much better this morning. Has been in a nice rally ever since we started this whole Ukraine event going on with Russia. That's been this kind of push into the safe haven trade. Unfortunately, gold is now very overbought here and has really kind of been struggling with this recent kind of top that it's been building. Have triggered a short-term money flow sell signal as well. So this type of extreme overbought condition is limiting the upside move in gold here. If you've been long gold here, this is actually a good opportunity to take a little bit of profit off the table. Doesn't mean sell everything, but definitely take some profits here. You're going to get some type of resolution in Russia. When that occurs, this will be a risk-off trade at that point, and you'll start to see that money move back out of gold, back into the equity asset side of the ledger. So again, taking some money here off the table, not a terribly bad idea. Oil is also up this morning on news that OPEC Plus is not going to increase production outputs in the United States. Frackers are doing everything they can to increase production here, but sand is becoming in real short supply. That's limiting more drilling. And of course, now with the Russian sanctions in place, that's going to take more supply off the market. It's not surprising. That is leading to a bit of a pickup here in oil prices this morning. But importantly, as we wrote about last week, markets are very overbought here, and oil has really been kind of topping here lately at these levels. Markets are still kind of consolidating on oil prices here. If we can continue a consolidation and get a breakout to the upside, that would give you a bit more advance in oil prices, probably to $100 a barrel. But again, as we wrote about last week, this has been a good opportunity to kind of reduce some risk in the oil sector. A lot of these oil stocks are very overbought here. So again, take a little bit of profit there. We did see those actually decline some last week. This kind of short-term news in the market can make prices kind of whippy, so you can see things kind of move around. But remember, the best cure for high prices in energy is high prices. Ultimately, that slows demand as high prices weigh on consumers and oil prices come down. There's been a very large increase in oil prices. This oil sector has massively outperformed everything else in the markets. That's generally a good setup for taking profits because eventually you're going to get a reversion of that trade down the road. Lastly, on the safe haven side of the trade have been bonds. Interest rates have been really kind of stalled here at these current levels between 1.9 and 2%. And we've seen bonds actually beginning to build a nice bottom here, been basing very nicely from an oversold condition. So again, as we see this kind of risk build up in markets, see this risk off rotation in markets, that has tended to flow into bonds. This morning, we're going to see bonds open up as money rotates from risk to safety. And because of the sanctions on Russia, that's pushing more international currencies and reserve currencies into the US dollar and into bonds as a safe haven place to hide assets for the time being. That's 3 minutes on Markets and Money. I'm your host, Lance Roberts. We'll see you back here tomorrow.